market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So this global sell-off is intensifying as concerns grow that the Fed is behind the curve with support for a slowing U.S. economy. Now, shares in Asia-Pacific had the steepest slide in 4 years. The topics and the Nikkei indices in Japan falling over 12%. So Bloomberg's Justina Lee is here with me in the studio. Joining us from Zurich is also Nannette Hechler-fayd'herbe, Head of Investment Strategy, Sustainability and Research, and Chief Investment Officer of EMEA at Lombard, Odier. So thank you both for joining us. Nannette, let's start with you. I mean, this seems like a big round because they're worried about AI. Markets are worried that the Fed is actually late to the curve, but there's also geopolitics, and then earnings have not been so good. What do you worry about the most?
I think at the moment the market is really reassessing its expectations. It was an all-weather, all is well type of sentiment for the last 6 months, and right now there is a level playing. So I think for now we are quite comfortable to stick to strategic asset allocations in investment strategy. It means no overweight, no underweight of equities overall. There is obviously a shake-off right now, which is favoring more defensive sectors and investment themes. And as far as fixed income is concerned, I mean, right now we have gone also from pricing basically no or very few interest rate cuts by the Fed to more than 100 basis points by now, by the end of the year. And that as well seems a little bit exaggerated after just one labor market report that was really below expectations.
Thank you, Nannette. Justina, it feels more than just a labor report. I think the fact that Warren Buffett actually cut his investments to AI and Apple by so much is also making people very nervous when it comes to tech.
Yeah, I think the sell-off really was exacerbated by how stretched the opposite side of the trade was. Like, for a long time, everyone was pretty confident about the soft landing. So people were going long tech. You know, they were putting on these carry trades. They were selling volatility. And I think it just shows how quickly these narratives can be upended. And I think it kind of began with the U.S. jobs report last week. And because of how stretched these trades already were, when they started unwinding, I mean, it just kept snowballing. And that is why we get such a big sell-off.
Nannette, when are you expecting global markets after the pretty intense rattling? I'm also looking at Japanese bond yields tumbling the most since 1999, which, of course, is hurting banks. When are you expecting for this to level off or at least stabilize?
I think we have now a few weeks until basically the next labor market report and indeed the September Fed meeting, where the market is going to be nervous. Let's not forget that there is a very complicated geopolitical situation as well. And the VIX has soared after a long period of very subdued VIX level. So I think we are in a risk-off mode probably for a few more weeks until the market gets soothing economic data again. I don't think that the U.S. is really poised for a recession. I mean, manufacturing has been very weak in the U.S., not only last month, it's been for a stretch of time. And for these few weeks, I expect a lot of volatility in the markets for sure.
Justina, are you expecting more investors to go to cash?
Yeah, I think for now that is what a lot of them will do. But one good thing about the sell-off is at least bonds are doing what they're meant to do. You know, bond yields are falling across the board. So at least you have that hedging your portfolio. And part of that is, of course, tied to Fed expectations. At least Fed has some place to cut from right now. And so you're starting to see markets pricing in, you know, maybe even a rate cut before the next meeting, or at least a pretty sizable one in the September meeting.
Nannette, just on tech stocks, and I know we'll delve a lot deeper into this, but was this a due correction, or do you think this is a panic sell-off?
I think there is a lot that is related to sentiment. I mean, Warren Buffett was mentioned. He is very well followed by so many. And there is really a lot of sentiment play, even in markets outside of equities. You mentioned the Bitcoin route as well. I think for sure that on the tech side, there is going to be opportunities as well. The artificial intelligence spread out of its applications to so many sectors is only at the beginning. And I do expect that when some of the negative factors of influence for the market in geopolitics, in the US economy and Fed expectations get clearer, the market has again potential to recover, including in technology stocks as well.
What's your take on, when you look at the various regions, it feels like it's a massive global sell-off. I mean, Japan is particularly hurt because they're also in this very delicate situation, just, with the policy that they've just announced. Again, could that take longer to stabilize than other parts of the world?
Yeah, I think that's a great question. I mean, especially since a lot of regions are especially kind of exposed to the cyclicality of economic growth. And I think you're really seeing that right now. I mean, in the case of Japan, I think a lot of that was also exacerbated by kind of this like self-fulfilling prophecy there. You have a lot of retail selling. You kind of have a lot of margin positions being threatened. The carry trade with the yen is unwinding. And of course, with bond yields plunging, I mean, that's threatening the profits of a lot of the banks. And so I think in Japan, you kind of have an especially delicate picture here. They've rallied a lot. But I think a lot of places will end up being even more exposed to a potential U.S. downturn than actually a lot of the big U.S. tech stocks, I think.
Nannette, one of the things that I know you wrote in your notes of course, the rout is the fact that lagging regions or sectors could play catch-up. Is that now delayed, or actually does it get accelerated because of pressures elsewhere?
No, I think it really gets accelerated right now because some of these laggards tend to also be the defensive sectors and regions. I mean, among regions that we have been quite positive on, for example, the UK has been a laggard and is one of these more defensive, less volatile regional markets. Also, having some sectors well represented like energy that tend to be high dividend paying. So at the moment, these laggards that at the same time offer defensive market qualities, and if on top of them offer some attractive dividends, are likely to be outperforming at this moment of just simply resetting the base in equity markets.
Nannette, can I also ask about geopolitics? Because I was just at the press conference from the Bank of England governor on Thursday, and he seemed to suggest that actually that tailwind from higher oil prices, from geopolitics that were very uncertain, has been taken off, which is why he seemed a little bit closer to cutting interest rates. Is this now back with a vengeance, or is it, again, part of the narrative that we're seeing a global market rout, and so people also focus on geopolitics?
Yeah, I think it's one of these typical summer storms where everything is gathering at the same time for the moment. Certainly, geopolitical risks are likely to get oil prices rather supported, especially because right now it's the Middle East that is in the eye of the storm. And as such, I would expect some of these tailwinds to come up again, as you say, are likely to be back, perhaps with a vengeance here, and giving support to the sector as well as to regions exposed to them.
Justina, if you look at crypto, and again, we're looking at NASDAQ 100 futures tumbling as this mega cap tech sell-off seems to deepen. But what's the role here of cryptos?
Yeah, it's kind of funny. I think today is a reminder that crypto, even for now, is still kind of pretty tethered to global risk sentiment. I mean, you actually see gold kind of rallying today, but digital gold is not really holding up. And I think it kind of speaks to this relationship that we've seen kind of in the past year, where it's, at the end of the day, pretty related to the riskiest assets. And I think that is, again, a reminder of that.
Justina, thank you so much, Justina Lee. And we'll have more from Nannette Hechler-fayd'herbe from Lombard Odier very, very shortly. Now, coming up, Berkshire Hathaway slashes its stake in Apple as tech stocks take a beating. We'll have plenty more on that next. And this is Bloomberg. So Berkshire Hathaway has slashed its stake in Apple by almost half. Now, it comes as part of a massive second quarter selling spree that actually boosted Warren Buffett's cash pile to a record $277 billion. Now, let's get more from Bloomberg Daybreak Europe anchor Tom McKenzie. I mean, Tom, 50% is a big deal. So they were kind of, batten down the hatches, trying to reassure investors.
Yeah.
But what does it signal?
It is a big deal. So $75 billion sold. They still have a stake of around $84 billion. They had a stake of around 140. So for 140 to 84 billion, it is still Berkshire Hathaway's biggest single stock holding. So that's the context. What does it signal depends on, I guess, your sentiment right now. A lot of people are looking at fear just around every corner, of course, given what the markets are doing. So for some, the take from this move by Berkshire Hathaway and Warren Buffett will be that he is seeing concern around the US economy, that this is a recession call from Berkshire Hathaway. He hasn't made a comment, of course, on the back of this. Other people would say, look, this is about risk management. Given the size of this holding in the Berkshire Hathaway portfolio, this is just a sensible readjustment in terms of their portfolio, or it's something to do with tax. And he suggested and nodded to that back in the early part of this year when he adjusted this holding in Apple. He's previously spoken very highly of this company. We're looking for them to come through with this upgrade, and we saw that from the earnings call last week. They think there's going to be an iPhone upgrade on the back of implementing some of their AI towards the end of this year. But it has left people guessing, and of course it's fed into the fear that we're seeing across the tech sector right now.
I mean, it feels like the perfect storm. So again, timing here is everything, because you have the Fed, you have concerns about a recession, you have geopolitics, you have earnings that weren't great, and then tech. Are we likely to hear from Warren Buffett?
Yeah, so the timing is absolutely crucial, isn't it? Yeah. It's just landed at the worst possible time for this tech market, given that the Nasdaq fell into correction, of course, to correction territory by the end of the close on Friday. We're seeing what's happened now. We're close to that circuit breaker in terms of the moves lower in the Nasdaq futures today. Apple, the last time I checked, was down around 6% in the futures. Nvidia's taking a big hit as well. So will we hear from Warren Buffett? He doesn't usually talk about these particular positions until it comes to their call, their meetings, their AGMs. So it seems unlikely. This is a trade that's done pretty well, very well for Warren Buffett, Berkshire Hathaway. The stock is up 900% since they first got exposure to Apple back in 2016. But for some, again, if you combine it with the moves to reduce their position around Bank of America last week, and now this sizable cut in Apple, then it does and has fed into this concern that we're seeing across these markets.
Tom, thank you so much. Tom McKenzie there, Bloomberg Daybreak Europe anchor. Now let's return to Nannette Hechler-fayd'herbe, Chief Investment Officer for EMEA and Head of Investment Strategy, Sustainability and Research at Lombard Odier. Nannette, when you look at some of, the tech stocks, I don't know how you play them given the huge rout that we've seen. Is this a good entry point for some of the more expensive stock, or do you just wait and see?
I think we are not in a rush to get in there, but the general story about the technological progress that we are seeing, and by progress, I really mean the different waves that we have seen in technology after digitalization, then the learning models, and now the application of artificial intelligence to so many sectors, especially in services. I think overall, people will look back to that episode as an interesting one to get in, but in no rush to take action here and now because of the broader context, Francine. We can still have a couple of more weeks of volatility here where the technology sector and other cyclical sectors just simply get repriced as people are trying to gauge the risks of recession in the US for one, and then generally speaking, the next moves on the geopolitical scene as well. So no rush here, but in general, still a conviction that technology is part of our future and very broadly applied in so many sectors.
Nannette, there's this pretty extraordinary story that's doing quite well on the Bloomberg, saying that basically traders are pricing in a 60% chance of a 25 basis points Fed rate cut within a week. Now, this would be an emergency rate cut. Is that likely? What signal would that send markets?
I think that would send really a bad signal for markets. If the Federal Reserve was to do an intermeeting rate cut, it would signal a sense of urgency that would continue to just feed that negative sentiment and the wall of worries. I think right now it may be more plausible to expect that actually at the September meeting there would be a larger than previously expected rate cut, 50 basis basis points, for example, and that is probably where we would be leaning rather than towards an intermeeting one.
So, Nannette, what happens if there's a 50 basis point cut in September? What happens after that? And, of course, in the next couple of weeks, we also have Jackson Hole that will really kind of, cement their ideas and their thinking on this market route.
I think, generally speaking, the Fed continues to be data-driven. And, the labor market report this month has been subject to noise. We know that there are seasonal patterns, but then also there has been weather-related influence on the labor market report. So I could very well envisage that the next labor market report actually takes away some of that noise and helps clarify the picture. I think it would probably point towards more rate cuts to come, even if the Fed was to deliver a 50 basis point cut instead of the previously anticipated 25 in September. There is another one to expect in December and potentially more in 2025. So for bonds, I think the general sense is that short-term interest rates continue to fall and continue to feed the normalization of yield curves in the U.S.
Nannette, thank you so much for joining us. Nannette Hechler-fayd'herbe there from Lombard Odier. Now, coming up, we talk geopolitics. Israel braces for retaliatory attacks after the assassination of Hezbollah and Hamas leaders. We'll have the latest from the Middle East next, and this is Bloomberg. Well, Israel is bracing for attacks in retaliation for assassinating Hezbollah and Hamas leaders as the U.S. presses for a ceasefire deal. Well, Bloomberg Horizon's Middle East and Africa anchor Jumana Bersace joins us now. So, Jumana, if you look at the developments over the weekend, they've definitely escalated. And good morning.
Good morning. Yes, an attack certainly does appear to be imminent, Francine. The U.S. Secretary of State Antony Blinken had a call with his G7 foreign minister counterparts, and Axios are reporting that he told them that they are expecting Iran and its proxies to launch a direct attack on Israel within the next 24 hours. This as the U.S. continues to deploy extra military warships to the region, fighter jets. The Central Command General is also in the region as well, looking to shore up more regional and international support, similar to what happened back on April the 13th, when you will recall there was a direct attack on Israel from Iran's part back then, but pretty much all of those missiles got intercepted because that air defense system and the coalition was in place. They're looking to replicate something similar. However, just in the last 20 minutes or so, we've heard from the Iranian Foreign Ministry, a spokesperson saying that Iran is not looking to escalate tensions in the region, but that Iran will take serious measures to create necessary deterrence against Israel. So the question here is Iran looking to escalate tensions, or are they looking to create deterrence? That being said, the region is on edge. Many embassies are advising their citizens in Lebanon to evacuate, to leave the country, including the likes of UK, US, Australia, Canada, Saudi Arabia, Turkey as well. And then many airlines have also suspended flights into and outside of Beirut and Tel Aviv.
Jumana, thank you so much. Jumana Bersace there with, of course, a very complete update on what's going on in the Middle East. Now, coming up, we'll speak exclusively to the chief executive of Novo Holdings, which manages the assets of the Novo Nordisk Foundation. That's coming up next. And this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The global market sell-off deepens into European trading after Japan's Nikkei crashes more than 12%, while traders increasing bets on the Fed making an emergency rate cut. Nasdaq futures tumble as investors pull further away from the AI rally. Warren Buffett also cuts his stake in Apple by almost 50% in the second quarter. And Israel is on high alert. The country is bracing for retaliation from Hezbollah and Iran. Axios is reporting the attack could come within hours. So let's have a look at what some of the big tech companies are doing. Now, it's only 20 minutes that we've had pre-market, for example, from Apple, but also Nvidia. This is one of the biggest stories of the day. But let me just put a little bit of context into all of this. It was last Friday that we had a jobs report that was much worse than expected. That sent a bit of panic, saying that actually the Fed was a little bit late to the game. And then this was exacerbated by Warren Buffett saying that he was going to cash. He has about $270 billion in cash right now, pulling away by 50% from his Apple investment. Now, what that means is there's also a concern about AI and some of the valuations in some of these big techs. So this global stock sell-off deepening on growing concerns about the U.S. economy, markets really adding to bets that central bank will cut rates. I think there's now priced in a 60% chance that the Fed cuts in the next 6 days. And then you can see that's putting a really big pressure on Microsoft. This is pre-market, down 3.5%. Meta, Tesla, also down between 4.8 and 5%. I think if you look at Nvidia, for example, that stock pre-market down as much as 9.6%. I'm also looking at Apple down 6%. So there's just a lot going on. It's geopolitics, of course, with worried about retaliation. It's what we're seeing in AI stocks. And then earnings in general, I have to say, we were looking at some data this morning with the team about what the S&P 500 companies have reported. They're just not great when it comes to revenue. So let's get more on all of this with our Bloomberg Markets Live executive editor, Mark Cudmer. Mark, so happy to have you on the show. Look, this is like a global stock market sell-off. We're seeing especially Japan really being sold off. I mean, at least I guess there's a reaction function with bonds behaving the way they're supposed to. Is that a glimmer of hope?
That is certainly one positive factor. I'm very impressed, Fran, that you've managed to find the one market's positive on a day like this. But you're right, 60-40 portfolios are performing better. And that's a big change from a year ago when we had a sell-off and it was bonds and stocks tumbled at the same time and caused such kind of angst for so many funds out there. Bonds are doing what they're meant to. They're working as a hedge. Now, up until Friday, in fact, this 60-40 portfolio was doing OK year to date, despite the losses last week. I suspect that after today's stock move, 60-40 portfolios are also underwater. But yes, at least bonds and stocks so far are trading in opposite directions, and that certainly helps lower the volatility for those 60-40 bond managers.
So, Mark, do you think this is a healthy correction, or at least a correction, or is this like a perfect storm because Warren Buffett sold out his stake, so there are questions about AI, there's worries about the U.S. economy, there's, of course, worries about geopolitics, and earnings haven't been that great?
Anyone who is trading in a stock market today does not think this is healthy. It might turn out to be called healthy after the fact in terms of it cleans out weak hands, it makes prices a little bit better. But we have just seen the most violent Japanese stock market sell-off ever, if you put it on the pace of losses over 3 days. I was trading at Lehman Brothers into the financial crisis when Lehman Brothers went bankrupt. I was at Nomura. I believe that's Japan's biggest equity brokerage during the tsunami in 2011. I have never seen Japanese stock markets like I have today. So this is not healthy at all. No, the moves out there we're seeing are really extraordinary. They're causing a lot of pain. It is one of those very, very rare days where I am absolutely delighted that I have no ability to trade anymore or have any risk, because this is a very, very painful market. Even if you're on the right side of it, it is extremely stressful in terms of portfolio management, managing your stops, making sure the winners you do have don't turn into losses, and managing that combination. As you talked about there, bonds are working as a hedge, but they're working in different kind of momentum, different pace, different speeds, slightly different time spans, and how you manage those losers against those winners makes it extremely stressful. So as I said, anyone who's trading today does not find this healthy.
Mark, when you look at Fed expectations, I mean, I'm quite surprised there's a 60% chance being priced in now by traders that the Fed cuts 25 basis points this week. I mean, this would be an emergency rate cut. Would that sow even more panic?
It probably probably would, but I think we're seeing panic out there already. So I think, actually, no. I think I'm going to change my answer there and say, no, the panic probably won't be much panic because we've got the panic. And so therefore, this would be the Fed reacting to the panic. And in fact, it might kind of go, hey, the Fed's always got our back. Let's pump up stocks again. Let's buy everything. Let's buy the dip because they're going to keep on printing money and pump up assets. So I think that, you know what, we won't get too much of an extra panic if the Fed does cut. That said, I don't see the Fed cutting this week because the economy in the US is slowing down. There have been definite cracks recently. It did not look like the data is pointing to an imminent recession or an imminent hard landing. There is certainly a slowdown, but a slowdown from pretty solid levels. Now, there's a risk that the financial markets become a key fundamental for the economy. And our colleague Simon White's done an excellent macroscope column on this, talking about the Fed may be forced to react soon to stop markets becoming a real drag in the economy. But we're not quite at that level just yet. That requires the panic sustaining for a bit longer because many parts of the economy don't mark to market on every basis. We're right in the middle of it. So we see every single pip, we see every single move, and it seems really panicky every moment. But for lots of people, they're not going to see how bad the losses are for another month, for another few weeks. And that's when you start seeing the real economic impact.
Yeah. Mark, thank you so much. Bloomberg Markets Live executive editor there, Mark Cudmore. He's not hiding under his desk, but he's leading a big team trying to figure out what is going on in the markets. Now, against all the volatility, the owner of Europe's most valuable company has set its sights on investing big in the green transition. Now, Novo Holdings owns a controlling stake of pharma giant Novo Nordisk. It manages the assets of the Novo Nordisk Foundation, one of the world's largest philanthropic enterprise foundations. At the end of last year, the company had almost 150 billion euros of assets under management. And joining us now is Kasim Kutay, the chief executive of Novo Holdings. Kasim, thank you so much for joining us.
Pleasure, Francine. I know, what a day to be on.
We've been trying to arrange this interview for quite some time. So away from the market volatility, there's also a couple of things when it comes to U.S. politics. Yes. When it comes to elections. Here in the UK, we have a change of government. Sure. How overall do you think that changes the landscape for healthcare?
Look, I think the secular, very powerful secular tailwinds for healthcare should hold us in good stead. And the most powerful one, of course, is the innovation that's taking place in the sector now. We are seeing, and you've heard me say this before, we are in a golden era of innovation. So actually, if you recall, when we had the biotech correction and the IPO markets were shut in the middle of 2023, we said, look, the IPO markets will reopen. Companies will be able to go public again. And this is exactly what happened, because at the end of the day, the innovation is so powerful, and we're seeing unmet medical needs tackled in a way that they haven't been historically, that has really put a floor on valuation. And indeed, what we've seen over the last 6 months is management teams, companies with late-stage quality data are going public, are raising funds. So actually, yes, of course, politics has an impact, pricing has an impact, but at the end of the day, the fundamentals, aging populations, growing middle classes in emerging markets, unparalleled levels of innovation should hold the sector in good stead.
Can you give me a sense of what you're most excited about? So I know there's been a lot of talk about prevention, and this is the next frontier. The problem with prevention is that you pay a lot up front. You pay a lot up front.
Prevention is critical. I think there's almost there's an economic and there's a moral argument for prevention. The economic, of course, is it just costs much less to prevent rather than to treat. And the moral one, of course, is that we're able, if you can treat people earlier, then you avoid the acute issues that arise with serious treatment, and indeed you save lives. And the imperative is higher today than ever before, just simply because what's available to us. So if you look at where diagnostics is today in terms of its ability to diagnose earlier and more accurately, and you look at the therapeutic interventions and options that we have today that we didn't have 10 years ago, it really means that moving and having a paradigm shift in our healthcare systems from really a system that's geared to treatment to prevention is going to be important. And frankly, I don't know how we're going to sustain the healthcare budgets that we have unless we move to a more preventative model.
But the problem is that it's upfront, it's quite costly.
Sure.
So is there a country that will lead the way in showing the right model for it, especially at a time where budgets of a lot of countries are extremely stretched because of the debt burden?
Yeah, I mean, I think interestingly, the most interesting examples that I have seen of prevention are in some of the smaller advanced countries. So Singapore has done a fantastic job. And the Emirates, I was there not long ago, fascinated by the amount of investment they're putting up front in order to diagnose and treat earlier and therefore avoid all the costs, both financial and to lives, that comes from ignoring prevention.
What's your take on what's happening in the UK again? We have a new government, freshly in charge for I think we're coming up to exactly the 1 month anniversary.
Yeah.
They have a huge problem of NHS on their hands.
Sure.
How do they recalibrate?
Yeah, look, I think first of all, broadly speaking, this government, the current government, is very focused on the life sciences, which is terrific because they have a very strong growth agenda, as you well know. And you're not going to grow the UK economy to its full potential without growing life sciences. It's the second largest industry in the country, so there's a very strong recognition. But you're absolutely right. I mean, the industry and the NHS are intertwined. And if you don't deal with a lot of the issues with the NHS, the UK will lose some of its leadership positions as a life science powerhouse. And I'll give you one key example. The UK is one of the leading destinations for clinical trials. You want to do clinical trials here as a pharma company for a host of reasons. The UK has consistently been a leader in Europe as a clinical trial destination. It's still a leader, but that leadership position has eroded. Why? Because the NHS is in the situation it's in, absolutely stretched, and an inability to work with industry in order to conduct clinical trials. So absolutely dealing with the NHS, particularly the waiting list, first and foremost, to get to that reset, and then take things from there. So I'm hopeful, and the government and West Streeting have been very clear about the need to reform and about the need to deal with the waiting list. So let's wait and see. Obviously, easier said than done. The issues are enormous.
I have a couple of questions on green, but also AI. So
sure.
Maybe we start with AI. Does that change clinical trials or the way that we develop, treat, and pay for at the end of the day?
Yes.
A lot of these
pharmaceuticals. Technology has a big role to play in healthcare in multiple ways, and we're very heavily invested in that. The whole interface between tech, AI, biopharma is a very interesting space. And of course, there will be efficiencies from the use of AI. It's incredible. Much of the healthcare industry, particularly if you look at the UK, you look at the US as analog, it's actually quite staggering. Stuff is on paper still. And forget AI. I need a basic technology adoption. So
yeah, we heard about computers that don't even link.
The computers that don't even link. I mean, it truly is analog. I mean, there's just such a long way to go. And AI would be icing on the cake. But where AI is also interesting is not in making technology and AI, not just in making our systems more efficient and productive, but they have a profound impact on drug discovery and indeed on diagnosis. And when we're talking about budgets and staff shortages, etc., the ability to use AI to enhance a physician's capabilities to diagnose and to triage patients is going to be a very powerful trend.
Talk to me about green investments, which, again, in this political cycle, I have to say companies, but also big, charities are a little bit more cautious about talking about green investment to see where the needle lands.
Yeah, we're not cautious at all. We're very bullish. We're very focused. I was actually reading I was reading the GIC from Singapore, the annual report there, and read the CEO's shareholder letter, and he expressed what I regard as our sentiments, which is, look, the direction of travel is unquestionable. There'll be bumps on the road, there'll be puts and takes, but ultimately we all know where we're headed. And if you're a long-term investor, it is a very interesting place to be. So we are absolutely full on, and we're going to take green investing from about 2% of our portfolio up to 10% by the end of the decade. We just announced a few weeks ago a very interesting investment in the UK. I don't know if you saw that, CircTech, which does recycling for end-of-life cycle tires. So if you are able to stay the course long-term, but importantly, invest in these companies as they scale, because that scaling often is what takes a long time, then I think the end rewards will be there. And certainly we are firm believers in that, both on the bio-industrial side and on the classic sort of green tech side.
It's so interesting. Thank you so much for joining us. That was, of course, Kasim Kutay, the chief executive of Novo Holdings. And maybe we should catch up in a couple of months to see how that investment is also going.
With great pleasure. Anytime, Francine. Thanks for having me.
Thank you so much for coming on. Coming up, the UK Prime Minister Keir Starmer calls on an emergency security meeting after far-right riots rock several parts of the UK. So we'll have all of the details next. And this is Bloomberg. Welcome back, everyone. Now, the UK Prime Minister Keir Starmer has called an emergency security meeting in a bid to quell far-right riots that have rocked communities across the UK. Now, violence erupted in towns and cities over the weekend in the first major test for the new Labour government. The disorder has been fueled by an online misinformation campaign since an attack a week ago left 3 young girls dead.
I utterly condemn the far-right thuggery we've seen this weekend. Be in no doubt, those that have participated in this violence will face the full force of the law. I guarantee you will regret taking part in this disorder, whether directly or those whipping up this action online and then running away themselves.
Well, let's bring in Bloomberg's EMEA News Director, Rosalind Matheson. So, Ros, what exactly has sparked the violence?
Well, they're both long-running factors and new factors that are really behind this, but it goes beyond what we saw a week ago with the terrible deaths of those children in Southport, the knife violence that happened there. And the UK has grappled with these issues like other countries for many years, the debate around migrants, asylum seekers, Islamophobia, and how to manage those in a society that's complex and fast-moving. And just like other countries, it's been an issue here. You can see it going back prior to Brexit. Brexit was billed as an effort to sort of put the migration debate to bed. It's only really fanned it in a way. We've only seen it become even more into the public discourse in recent years. We've seen some attacks on politicians. Now we have this, and we've seen that sort of colliding into the events of Southport. We're seeing disinformation being propagated, as you say. Part of that might also be these right-wing groups using this disinformation to try and pressure the new government. Of course, we just saw Labour come in after many years of Tory rule, so perhaps these groups want to put Keir Starmer, the Prime Minister, under some pressure. Like, how's he going to handle this situation? How's he going to manage it? How's he going to contain it, if at all? And so it's really an effort to also test him quite early in the piece.
So, Ross, how has the government responded in the UK, and actually how can they tackle misinformation?
Well, as you heard, he's come out pretty strongly and said we're going to deal with that. He was, of course, a chief prosecutor back in some London riots in 2011, where he was also managing that process. We saw the riots that spread across London in the wake of the shooting of a black man back in 2011. So he's using that playbook again, which is get the courts moving pretty quickly, get these people who've been arrested in front of courts, try and contain it by putting a legal net around people, getting more police out onto the streets, because these groups are saying they plan more incidents, more moments. They're trying to keep things going. But beyond that, even if you get, 300 people in one place and they stop coming out, it's obviously still bubbling away in society. And that's a much more complex thing to tackle. How do you deal with this structurally in society?
Roz, on the U.S. side, when do we have Kamala Harris actually picking her VP running mate?
Well, imminently, we hope, because she's supposed to be on the road this week with her vice president pick campaigning. And they said they want this knitted off also by August 7, so today, tomorrow, quite possibly. We know from sources that she was meeting some of the members on the shortlist yesterday. That seems again to be around a number of senators and governors, including Josh Shapiro from Pennsylvania, of course, Mark Kelly, the senator from Arizona. What these shortlist all has in common is that they're white, they're male, and they're sort of centrist in the Democrat camp, and they're saying it's a balance for her, because some of the attacks that are coming already on her are saying that she's a California liberal, that she's very, very radical in the Democrat Party. Whether that's legitimate or not, that's the attack line that's coming. And so this can balance her out, particularly in swing states. But then, of course, she has to be on the road with this vice presidential pick, and they have to do proper campaigning, and that's going to test her a bit.
Ross, thank you so much for the update, both in the UK and the US. Rosalind Matheson there. Now, coming up, Europe's most valuable companies among the major firms due to report earnings this week. So we'll have a full roundup of not only the Rout, but earnings. This is a Bloomberg. Well, Europe's most valuable company is among some of the biggest firms in healthcare, manufacturing and travel reporting earnings this week. Tim Craighead, Director of Research at Bloomberg Intelligence, joins us now. Tim, thank you for joining us. Given the massive rout that we're seeing, where do earnings play into this?
Yeah, well, while I think that there is reason to be looking ahead, and this too shall pass for lots of things. Earnings are not necessarily one of those supportive factors. We have seen beats outpace misses, but growth expectations for the second half have come down a couple of percentage points. We have seen some negative revision to forward numbers as we look out to 2025. So earnings, they're okay, but they're not great.
So what can you tell us about what are the big earnings that you're watching for this week that could give us an indication where the market's heading?
Yeah, I think there are two key things to look at. One is you mentioned Novo Nordisk, Europe's largest company. You've also got Eli Lilly in the U.S. They are the competitors in the diabetes, anti-obesity area of GLP-1. It'll be really interesting seeing not only how their sales are going, but how their supply constraints are, which has been holding the market back versus much larger demand. The other area to watch, I think, is the U.S. consumer, because we start to see some of the retailers reporting. We've got Costco, Yum Brands, which is KFC, Pizza Hut. You've also got Disney that reports. And those touchstones in terms of U.S. consumer sentiment and how they're feeling, and importantly what the CEOs are saying, I think is going to be a pretty strong guiding light.
Yeah, it will be, especially as the markets, I think traders are pricing a 60% chance of an emergency rate cut, 25 basis points from the Fed. Tim, thank you so much. As always, Tim Craighead, Director of Equity Research for Bloomberg Intelligence. Very quickly, we've seen a massive global stocks rout. So let's have a look at big tech pre-market here in Europe. So this is pre-market. You can see Apple 7.8% lower. I'm also looking at Alphabet and Nvidia down 9%. Up next, more on the markets with Bloomberg Brief with Manus Kranya in New York. This is Bloomberg.